Good afternoon. I'm Scott Wapner. It's about noon here in the East. We're going to step away from that testimony from Fed Chair Jerome Powell and call your attention to this breaking story here on the right-hand side of your screen. And that is a sharp plunge in shares of New York Bancorp, now down some 45%, as the Wall Street Journal reports that this bank has contacted investment firms on a potential equity sale as it seeks outside capital to shore up its balance sheet. These shares have been down more than 70+% since the beginning of the year on concerns over the bank's loan book, its exposure to commercial real estate. I want to bring in now our Leslie Picker, our banking reporter, who has covered this story from the outset with what we're learning here. Leslie, what can you tell us?
Hey, Scott. Yeah, this is something that had, in part, speculation surrounding the need for an equity capital raise on Monday led to the decline in shares then. Now these reports, which I have yet to independently confirm, but suggest that New York Community Bank has been reaching out to investors to see if there would be interest. Now, the reason this is sending the stock lower is because this stock has already plummeted, before these headlines hit, more than 70% year to date. So they would be doing this equity capital raise at a very depressed valuation relative to where they started the year. And it would potentially be dilutive to current equity holders. So that's why you're seeing such a significant drop in shares. It also comes, whether it's a coincidence or not, almost a year from the Silicon Valley Bank demise. And what happened there is you had a equity capital raise, or the attempt to do an equity capital raise to fill a hole on its balance sheet due to some asset sales that they had to do. That ultimately led to the takeover by the FDIC into receivership for SVB. So history doesn't repeat itself. It rhymes. But all of this taking place kind of among the same realm is a concern for investors at this juncture.
Yeah, clearly, and we're going to keep watching this story. Leslie Picker, thank you very much. You'll let us know what else you hear. I do want to bring in our senior economics reporter, Steve Leisman, who's been watching the Powell hearing on Capitol Hill, because, Steve, the Fed chair has been speaking a bunch about bank stability. He's been asked directly about it. I'm curious as to what you think of this story and how it's going to play inside the Fed.
Well, I don't think the Fed is seeing what's happening at the New York Community Bank as a systemic risk story, which is the way that it would sort of rise to that level. He was asked specifically about the office commercial real estate issues and problems on the bank. He called it manageable, was a term that he used. Also on the banking front, Scott, if I could just pivot quickly, these new proposals for higher capital levels at the banks through the Basel III proposal looks like it's in real trouble at this point, both politically and at the Fed. Fed Chair Powell talked about broad-based changes to that proposal being likely. Also even brought up the possibility of reproposing the entire proposal that's come through, which would really start the clock again and push us ahead. It looks like the bank lobby has won a major victory on this and seems to have a lot of support, certainly on the Republican side, even some on the Democratic side, it would appear. So that's the big story. I'm not hearing him talk about this commercial office real estate issue at this point as a systemic problem.
I understand that, but I think we do need to go back to the time in which, and remember, as Leslie Picker said, we're almost exactly a year away from the Silicon Valley Bank issues. And I think we need to go back to the time when New York Community Bank bought Signature Bank and the assets of Signature Bank, which the Fed would have had oversight of. You correct me if I'm wrong. And I'm just wondering if something was missed, that maybe that deal should have been questioned a little more firmly at the time. It's easy to be Monday morning quarterback now, but the Fed does have oversight on this issue, and one I think can credibly ask the question as to whether a ball was dropped somewhere, Steve.
I think that's an excellent question, Scott. I've also seen the history of these things where some of the banks who step in to take over these problems end up, and by the way, a lot of these things are done burning the midnight oil, and sometimes they do miss things. And so banks who have stepped in to help out the Fed or the government in these situations end up taking considerable losses later on. It's not unusual. And New York Community Bancorp ended up appearing to be not big enough to withstand those issues, Scott.
So the stock is down some 45%. The Fed chair is sitting in front of the House Financial Services. Yes, Steve?
Yeah, I do want to get, if you have a second, just to the monetary policy part of this report. I was going
to lead you there in that, you know, it's just interesting. We're having this conversation as Chair Powell, as we're looking at a live shot now, is still sitting before the House Financial Services Committee, obviously unaware of the latest headlines that are moving about New York Community Bank, not to overshadow the hearing today on monetary policy, which was largely stay the course. That's what we heard from Chair Powell.
Well, that is correct, but I did hear a little bit of a dovish twist or interpretation of how long the Fed will wait. And I want to go through a couple of the things he did say. He said, what we need is just a bit more evidence. He maybe sort of set the bar low for how much more evidence the Fed needs. Just a bit more evidence. And he went on to say, I just want to get the words right here, we're not looking for better inflation readings than we've had. We're just looking for more of the same, is what he said, Scott. So we've been wondering, what is this bar for the Fed to get confident? And he kind of gave us an explanation, I think, where that bar is not maybe as high as you thought. And he also reiterated the notion that he said before, not looking for inflation to come down to 2% before cutting. So I did see a very small rise, Scott, in the probabilities of rate cuts, a little bit in March and a little bit more in June on the back of those comments. So when we're trying to figure out what it's going to take for the Fed to get confident to cut rates, Powell set the bar maybe a bit lower than we thought it was before.
I mean, he also, I guess, puts a bit of equilibrium between the two ideas of, yes, there are risks to cutting too early, but there are also significant risks of cutting too late. He acknowledged that once again today, and that has to be clearly on the Fed's mind as well. And when we have headlines like the one that we're just talking about with New York Community Bank, they become a little more elevated, I think.
I think that's right, Scott, but I have yet to hear, and boy, I'd sure like to hear Leslie's take on this, but so far, the take that I've heard from the regulators on this story is that what's going on at New York Community Bank Corp has been isolated to the New York Community Bank Corp. It's not really even the canary in the coal mine for the story about office real estate, because there's sort of like these very unique things on the book of New York Community Bank Corp. I feel like we're all looking for that canary in the coal mine, Scott, when it comes to the issue of the effect of the office vacancy rates and these loans and the valuations in office hitting the balance sheets of the banks. But what I've heard from regulators, Scott, is, and what Powell said today as well, is they have been working strongly with the banks, especially the big banks, to make sure that they're shored up against this. And he also said they've been working closely with the regional and the smaller banks on this issue. Whether or not that preemption is something that could stave off a worse outcome from this, I don't know the answer to that. But certainly the Fed chair does not sound like he sees this at the moment as a systemic and or cascading issue for the banking system.
Nor has the Treasury Secretary, Janet Yellen, because she's been asked directly about it, too. And I think she used the words concerning but manageable, I believe was the word she used maybe four or so weeks ago.
Well, maybe, Scott, what we want to be careful as the time when the regulators aren't worried is the time when investors should be worried. I don't know the answer to that, but they are telling us they've worked with the banks. I will say this, Scott. I don't know that they have 100, they can really work their way out of this ahead of time. But it's not something that they didn't see coming. This has been out there for a while, several years now, in fact. And we also know when these things come due, and the bulk of them come due, it is on the way. And when you talk about the need for the Fed to cut, this is part of that story, that the Fed doesn't have infinite time before all of this debt comes due. And it would sure be a better outcome if the Fed were at a lower rate for the refinancing of these commercial real estate properties.
Yeah, there's no question. You just don't want to be too reactive to a gathering group of problems. You could say that they didn't see the run on SVB. Maybe they erred in allowing this transaction to take place between NYCB and Signature at the outset, but it does raise more significant questions.